What's up, everyone? How's it going? Welcome to today's market analysis slash trade recap session. I'm not gonna lie, today wasn't a bad day per se, but it wasn't the best day either. We did come out on top on the day with one winner and one break even, but there were things that we could have done better today, so I do want to go over that and also just analyze the whole market here for you guys. But to begin, I do want to give a quick summary of the news that would have came out today. So let's go ahead and dive straight into that right now. So today we had prelim University of Michigan news, right? And one of them did come out as breaking, so it was good that we essentially took that two to 5 minute interval between 8:55 a.m. to around 9:05 a.m. approximately. Because as you can see, look at that candle right there. This entire wick and everything to do with that got created because of that University of Michigan news. But yeah, that was the only major news event for the day. Let's go ahead and talk about the context and the pre-game plan coming into the day. If you watched pre-market analysis for today live session, you would have known. But let's take a look at it nonetheless. Market open right here. So essentially, we had two options, right? We wanted to see how price would react to this level, and we wanted to find direction before, right? Honestly, I think we could succeed without using any of this charting as well. But by using the charting, we could see reactions prior and try to build a more predictable and probable idea. So what we saw coming into market open was that we did sweep these lows right here, and then buying came in. That I'm not gonna lie, that did put us in somewhat of a bullish bias for the day. But that quickly got shut down. After market open, we started seeing heavy sell pressure occur. Our sentiment shifted. We essentially wanted to see how it would react towards this at this 30-minute level or potentially at this 1 hour level, whichever corresponds to Bookmap liquidity, as you can see. And honestly, we're working with Bookmap liquidity more than anything, but sometimes Bookmap liquidity lines up with a lot of things that you see on the chart. For example, right where we're seeing that imbalance below area, the that's exactly the point where people think that if we break below this area, we'll head all the way down here, and a lot of people get short down here. But we can see that being why so many traders fail, right? Because we have so much bookmap liquidity there that sellers are unable to break through that relative area, get absorbed, and you start seeing buyer pressure occur, stopping out all these sellers that got in off of breakout down there. And we can go ahead and see this down here as well. You can clearly see absorption. Look how many wicks there are right there. And look at this. Honestly, this is one of the most clear signs of absorption I've seen. Large selling here at the bottom, large volume, large selling here at the volume bottom, large volume. This has got to be one of the most high quality absorption that I've seen in a while. Here as well. Selling tried to kick back in down there as well. Not with much volume, but with aggressive selling. Nonetheless, got shut down. Every time we came down to this 6325 relative area or 632 3.25-ish area, sellers were unable to push down below, and it has identified itself as definitely a key level for price. But we're working too far into the future because we'll keep more of that for the next pre-week analysis. For now, I want to talk about what actually happened in the market, and I mean, yeah, let's do this. But essentially, it's going to be the same thing here on NQ. But on NQ, we're already at the all-time high areas, and what we did see coming before market open was that NQ all-time highs were swept, which now we have to see a reaction off of it, and at market open, we started seeing selling occur, helping us put ourselves in that selling bias or the bearish bias. But let's start going candle to candle and analyze the market and talk you through why I took these two trades and the overall ideas and what I did right, what I did wrong, the pros and cons of both trades. But let's get straight into it and look at Bookmap as well. So right at market open, we started seeing aggressive selling come in. And there's nothing to trade there, of course, because we are seeing passive participants on either side, nothing too significant. Let's go to a market open time here. Mm. Yes, coming into market, we saw these buyers kicking prior to market open, and you see a lot of that buying get absorbed. Large volume, large buying delta. Next candle, we saw aggressive selling come in. Now we've taken this lower area. We're looking to see if there's absorption at the area, and although there is volume, it's still so close to market open that assuming there's absorption with all of this market open passive liquidity being into the market, it's not worth taking a trade at this point. And honestly, I would lean towards the short side simply because of the fact that we are holding this level with passive selling. Potentially, if we head back up to this level, we can continue to take a short down to 6338. But let's keep going forward and you'll see what happens. See, now these buyers start to kick in, and now we're a bit within a passive sell battle or passive participant battle, and honestly, no trades to be taken there at all because we're just within this passive range of liquidity on Bookmap. Now we do see buyers start to step in, as you see, but they do happen to get shut down near the top, I believe. Yep. Nothing we can predict there as well, simply with our system at least, simply because we don't know how that bottom barrier is going to hold or if such abrupt and aggressive selling will occur like we saw here. But let me keep moving forward. Now, the liquidity book did clear up a little bit, which does provide us better ideas to potentially take a trade. But again, nothing really we're seeing here. That liquidity quickly cleared up, came up, and now liquidity cleared out very... This is the thing with news, right? A lot of that passive liquidity clears up right before news. And the reason for that is because these passive orders don't want to get filled because of that large volatility in volume that occurs from news, which is 15K in volume. As you see, all these, there's nothing preventing either buyers or sellers at this point really until 6360 or 6340. And as you see, aggressive buying starts to come in, which is quickly canceled out. I do want to highlight that. That aggressive buying that came in with the news, as University of Michigan sentiment data did come out positive to a decent extent. Those sellers did get shut down, and as you see, right at those highs where that news liquidity was made, we see that actual confirmation of liquidity. Thus, we marked it out as Bookmap liquidity there, but we happen to see that we've not touched that area again. We start heading down now. And we want to see if we can either take a reversal play or a retracement play towards the short side. And reversal play being if we see absorption near these lows. And originally we marked out this level on the footprint chart, and at 910, which is around where we're at right now, we wanted to see if we could potentially take a reversal play if there was absorption. Hold on. But the thing is, we're not really even inside of this passive participant area, meaning that we don't know what exactly could happen. And as you see, sellers pop in once again, and they actually start pushing down aggressively. As you see there, we do start to see a little bit of seller absorption, and you can see that here as well. We do happen to notice aggressive sellers try to come in but are unable. But the reason I didn't take longs from that is because we do have a decent block of passive sellers preventing price from going up. And if we took longs, our target would be much higher around this area, which is not very likely to occur. And we need aggressive buying to kick in, and honestly, we did not see that. Those sellers came back in after a touch of these passive sellers. Now we're targeting the lower liquidity again, and we do see us quickly break through it like such. Maybe you could have taken a trade there. Let me see. At 10:15 here in this candle. It's a 4-1. Mm, that's difficult. Because what I'm seeing on Bookmap is that we might be heading into this passive liquidity, and from that buyer absorption into the bottom, potentially barrier retracement play there. There at 9:15, but pretty quick, and we're so close it wouldn't make sense risk management in a risk management perspective. As you see, the aggressive sellers just pop in and pop in. But what I notice here, right? Take a look at below. We have these two key bookmap levels that price seems to be targeting. 63.30 and a level below it. So 6331. We marked that out like such right there. And right there, 6331.25. That was our key level on Bookmap. And we're seeing this aggressive selling pop in, whereas the next target is down there. So if we could make a retracement play and make a reaction off of such, I would be more than happy to enter. As you see, 6331. But as you see here, what we're doing is we're moving into this big block of passive selling inside of the market. So I'm looking to see how price reacts off of that passive selling. Now guys, although we do not see buyer absorption there, what we do see gives us some sort of confirmation that selling might want to come in aggressively. And that's right around here, I believe. It will come soon, just wait for it. It will come soon, just wait. Yeah, right here. So what we see is that we stepped into this area. We didn't make much of a reaction from it, so we're not inside of the trade just yet. So we want to see how we react from that upper level. And we come inside the upper level with decent size buying. And if you quickly look, I'm looking to see how we react off of this area. Because there are key targets near the lows, which I do want to go ahead and chase. And as you'll quickly notice, we see an aggressive, abrupt burst of selling that entered into the market. Right as that selling came in, right as that aggressive selling came in, after we've touched into that passive barrier, I entered with the logic of a momentum play. And I kept my TP down here with my stop right above this passive selling area around 6341, around this main area where we were rejected off of. And honestly, I was planning to just ride the momentum down until we touch the lower liquidity or get around it. And as we see, it does happen to play out in our favor to a decent extent, as you see right there. But I do want to highlight this. I do think we might have done something wrong in this trade. You might be wondering, why was my original why did I take profit for only 14 ticks? Well, we were watching the Bookmap live stream. They said something about NQ Bookmap liquidity. And so I looked at NQ Bookmap liquidity and I saw that get taken. So I exited when that NQ Bookmap liquidity got taken, but not the ES Bookmap liquidity, which is down here. So I was already in not the best mindset because I was less patient than before simply because the prior day was a flat day as well. And that could have potentially led to me taking profits early, which we learned from and we're planning not to do that again. because if we just did what we were supposed to and take profits where the actual bookmap liquidity is around that 6331.6331.25 area, half a point above it, simply to avoid that edge occurring. Like when I mean edge, I mean like almost touching the bookmap level but not. We saw exactly that occur. Like take a look at how precise this is. We saw this selling occur exactly to our target, exactly at that bookmap level. And then we see buying start to come in again. This shows the actual edge that you can get, right? And now I'm talking about a real trading edge. But since we exited when NQ bookmap liquidity was taken, we lost out on the opportunity of taking 10 more ticks in profit, which is quite significant, guys. 10 ticks would have took this risk reward from a 1.08, basically a 1-to-1, to almost a 2 risk reward, or in this case 1.85. So we do want to be aware of that and focus purely on ES liquidity. Overall trade idea was not bad. One good addition to this trade that would have made it a lot better is simply to wait until we see buyer absorption here at the top. We did see buyers get into that passive selling area, and then we saw a quick reaction off of it. It's decent confirmation, but on a real note, it's kind of mid. I wouldn't call it an A plus plus setup. I would maybe call it an A or A minus setup when we are always looking for these A plus setups. So it's reasonable to take, but it's not the best types of trades to take. So that's my word on this first trade. Well, let's keep going and see what made us take the second trade as well. As you see, we're stalling at this area. We come down towards that area. We actually tap into this lower liquidity here at 6331, right here. And we do see lots of sellers come in, and we do see a quick buyer pop in. Now here you might be wondering, why is there a zone there? Simply because we saw stacked selling delta with decent volume at a high volume footprint node. Wanted to extend that because that might be area price may reject off of. We marked this area as well because that's where we saw buyer absorption potentially occur. Now, in hindsight, this wouldn't be buyer absorption because look at how strongly we closed. But yeah, what we saw occurring was these buyers pop in after potential seller absorption here at the bottom. I wouldn't really be too confident in such, simply with all the selling momentum we were seeing. And the fact that look at how these selling passive participants are moving down. That's showing urgency within passive participants, potentially hoping for a move down in price. And it does happen to be what we see here. But we come back down to that area. Where is this 10, 9:30? So it'd be in this candle. This is where we see our second pop up. Wait a minute, I'm trying to see something. Ooh, wait, maybe. I think there was a lot of buying liquidity going on there simply because we saw these passive participants suddenly occur at that area, potentially trying to hide themselves. Oh. But then we see buying start to stall out, but does happen to go up a bit higher. I want to see if you get into passive liquidity there. There's around 100. I wouldn't be too confident such simply because we're so close to that upper level as well. And because now we are seeing passive buyer urgency. So again, definitely would have been flat here, or should have been flat. Let's see where we took our trade. We took our trade right at 9:50. We still have 15 minutes after this. So you saw selling come into that passive buying relative area. As you'll quickly notice here. This is at that 9:35 candle. Right here. But I do believe selling does happen to break through. Yeah. And then we head all the way back down to these lows. In hindsight, it does look like we may have entered into passive selling liquidity and then we could have taken shorts, but not really seeing absorption there. And since we were zoomed in, we did not really see that absorption that we wanted as well. But this 6,300 level is holding very, very, very strong. We came down into that level again here at 1040. So now we are contemplating if shorts are actually going to be the way that price may want to head. Simply because we've tested this level once, twice, 1, 2, 3, 4, and now 5 times. We are unable to break it any of these times. And now we have passive selling there, which is showing us that sells might actually come in. And as you see, we head up to that level. You shorts come back in again? Maybe we could have entered a position there. $10.47, so 10.45 candle. 9.45 candle right there. I don't know. I really want to go back and see because we did not enter a position there, but we may have been able to. Because as you can see, we head into this micro barrier here on ES. We see buyer, a little bit of buyer absorption there. But do sellers react aggressively off of it? Nonetheless, it's not a significant barrier, so I would not be comfortable taking such trade. Because as you'll see, it's only around 100 contracts when, say, our average is around 80 within the current range. What's 80? Hold on. What's 80 times 1.5? That would be equal to 120. So anything around 120 would be significant. That's why this level is significant. That's why this level is significant. And any barrier around that relative area will also be significant. That is simply not something we should worry about. We did see selling come in nonetheless, so it may have worked out, but I would not be too indulged in taking such trade. But as you see here, we were indulged in taking such trade when we saw this occur. What we see happening now is, after all these tests, what we see happening is that now passive buyers are coming back into this area once again and defending that 6331.25 area. You can see that reintroduction of that passive liquidity here on Bookmap. So with that occurring and with a pop of buyers like we saw here, after potentially all the seller absorption, which in hindsight is not the best quality, we entered long here, as you see here. And we entered long pretty late, that is too, 6334.25. So right around here we entered long, and we decided to enter long targeting these 6340 relative area. So it looks something like this, right? It's break even, but we kept our stop loss below Bookmap liquidity, which is 18 ticks. So that puts us at around 1.2 risk to reward, which isn't the greatest once again, but we entered in that trade, and realistically, just because this occurred doesn't mean that there's enough confidence for us to actually feel confident in targeting these highs once again. Simply because we didn't really see any seller absorption at the area. We just saw that introduce itself. And additionally, look at all of this passive selling that we're seeing here on Bookmap. That's quite a lot, and that's quite significant. We said 80 is our average, so we want it to be 120. Well, before our level, although none of these levels are 120 plus, just add them together. That's 200, that's 300. Before we can even head up there, we have to break this level, which would be equal to 200. That looked not great, but we needed to break this level to head higher, and that level is filled with 200, which is much greater than 120. And simply because we saw that occurring, and simply because of the fact that this is not our system, that is more of a discretionary approach. And although our strategy is discretionary, we need to apply that discretion under the laws of our system rather than randomly using this information, because then it would be guessing, and that's the reason many traders fail as well. We need to use actual data that we've tested in order to ensure a probable setup. Like, I'm not gonna lie, this does show some sort of buyer introduction, and that is decently bullish. But what is telling us that these buyers are aggressive enough to break through higher, break through above this level even where we saw that selling introduce itself before and head all the way to our target? What makes what makes it so that buyers will head up and that sellers won't simply start coming in back again trying to test this newly introduced level? We don't know, and because there are too many unknowns, and we realize that with buyers being unable to come in with extensive momentum. Like, if buyers came in with a lot of momentum after we entered in the trade and we were in profit, we likely would not have took a break even if we should have. But I'm actually happy that we started stalling because we quickly realized that it wasn't something we should have taken, and we simply took a one tick loss, essentially break even on that trade. But let's keep going. After this, I was pretty much done for the week. I was tired. Not really tired, but the market the second half of this week has been very choppy, and yesterday Thursday was a flat day. Wednesday we did not trade at all because of PPI. No, Wednesday we did trade. Tuesday we did not trade at all because of CPI. Wednesday we did trade and we took a loss on Wednesday on PPI, a small loss, and Thursday we took no trades. We were flat because of market conditions. And now Friday we took one trade that was profitable and one trade that's a loss. Do we really want to keep testing our chances in this type of market, or will we stay flat? Because as you'll see, there's really nothing we could have taken. We broke the lower liquidity. Now, is there anything we could have taken? Let's quickly speed run through this. Nothing there. Market is pretty open in terms of passive orders now. Nothing really we can work with. As you see, those buyers do start to come in, but we don't know. Sellers start to pop in again. Is there anything we can work with there? Hell nah. Now we do see some passive buyers there, but nothing we can really play off of. Let's keep going. Nothing there. Nothing there. We're still working through this. And honestly, there wasn't really much that we could have played off of. As we'll keep going, there was essentially nothing. No real targets other than that 6340 area. That was our only key level to actually strive for. And by that time, we could even potentially take a trade. It was already very close to that level, and it was already past our session time, which is 11:30 EST or 10:30 Central Time. But yeah, that's honestly all for the day. We've analyzed the entire market session, gone over these two trades, both the pros and cons of the two trades, and we've discussed a bit more as well. But other than that, if you have any questions that you would like me to answer, please let me know in the comment section down below, or feel free to join the free Discord server. The link is in the description down below. I definitely believe that you may be able to gain a thing or two out of it. Additionally, if you want to take advantage of footprint tools like Addis for completely free to start integrating it into your strategy with the 15-minute delay on futures, CME futures like ES and NQ, take a look in the description down below as well. They're one of our channel partners, and honestly, it's one of the most user-friendly order flow tools that I've used. I highly recommend you guys to check it out, but do your own research. I mean, use the free plan and start integrating it. There's nothing really you can lose. Additionally, Bookmap is also linked in the description down below. I only support really free products, and things you can really use right now to start integrating. So I highly recommend you guys to check it out. But other than that, I don't have much else to say. I guess I'll see you guys over the weekend for both pre-week analysis and maybe also educational or backtesting session. I guess that's up to be seen this weekend, but I guess I'll see you guys then. Goodbye.